Welcome to the Flywheel Podcast, where we spin up strategies to turn your digital efforts into unstoppable momentum. Now, let's get that flywheel turning. Professor X, what's going on? How's your day?
It's Friday. I'm ready to have we've been off a couple of days now, so I just thought, it's Friday. Well, let's get this flywheel in motion, get this and talk about all the stuff that we're going to talk about today. How about yourself? How's your week so far?
Week's been good. Just going, Weeks are flying by. I guess as you get older, time flies, right?
And time flies when we're having fun. Yes, absolutely.
Yes. Okay. Well, when you're having fun, we're not having fun with the banks, are we?
The banks are, you called it yesterday, I think as well. We talked about it. It's legal theft, right? So, let's get into it. Let's talk about that.
Well, this monetary reset, this is actually going to be a monetary reset. It's not market speculations. Reason why? Trust has been broken by the people. We see the fiat currency is the biggest Ponzi scheme of all, right? And that fiat currency is backed by just a full faith and credit. It's not backed by anything tangible, right? So the U.S. alone is racking up $1 trillion in debt approximately every 100 days. So it basically costs roughly $3 billion a day for us taxpayers, right, to service a debt. So the fractional reserve banking, this is where banks create money out of debt. Since March 2020, banks don't even need to hold the 10% reserve anymore. So the system is backed by nothing, right? So fiat currency is basically a Ponzi scheme. Everyone sees it for what it is, right? So my question to you is, how can you trust the banks going forward? And also, do you want to keep your funds in the banks?
No. So this is what we talk about in the crypto flywheel. I don't trust the banks. I definitely do not trust the banks. Like you said, I totally 100% agree with you as far as what the banks are doing. They constantly rehypothecate. They send money. Lend our deposits. We're unsecured creditors to the banks, right? So that's why I want to be my own bank, effectively. And that's what we are talking about with this new financial system and digital asset space that we did an 8-part series on. So to answer your question, no, I do not trust the banks.
Where I was getting at, you have the banks. Now, guys, you guys have another option. And you guys have to open your eyes and see what that other option is. And we're here trying to educate you on what you're able to do to protect yourself. Actually, protect yourself better than what you're being protected now by the banks, right? So what I suggest is, or what I'm doing, and Professor X is doing, due to that Genius Act that was passed, I believe 3 or 4 months ago, it's not fully in effect. This is what the laws are, the laws that regulate them. So for every dollar stablecoin is like $1 US, right? So they call it stablecoin because it's on a blockchain. So for every one stablecoin, the company that issues the stablecoin must hold $1 in super safe, easy to sell assets. So they have to be backed by a 1-to-1 ratio by an asset, right? So there's no shortcuts. It's 100% backed. They buy short-term. So the issuers, what they do is they buy short-term U.S. Treasury securities, like the Treasury bills that mature in 93 days or less. These are basically super safe government IOUs. They're much better than what you have in the bank with the bank, right? If you put your money into the bank right now, it's not safe. You have to come up with 100 different reasons for why you want to take it out. They'll ask you like 100 questions before you even can withdraw the amount of money that you want, right? So there is no lending or risky stuff with the stablecoins. They cannot lend out their reserves, right? Reuse them as collateral for their own bets or invest into stocks, crypto, or risky things. The money has to stay safe and ready. That's what these issuers that issue these stable coins have to do. And Also, you can always cash out. So anyone holding the stablecoin must be able to redeem it for $1 in real money on demand or very quickly as you need it. So you don't have to explain to anyone that, hey, I need to take out $10,000. Where's this going? Or what are you using it for? It's none of the bank's business. But if you hold a stable coin, you could take that out whenever you want. You could transfer it. You could send it to someone else. You could pay someone with it. It's all about how to obtain it and how to interact with it. You have to be educated in the space in order for you to understand what you are able to do with these. It also allows it to show everyone the proof, right? So everyone can see the proof where that stable coin is. It's on chain, right? So every month the company has to publicly post. So the issuer, the company is the issuer of the stable coin, has to publicly post how many stable coins are out there, exactly what safe asset they're holding to back them, so they have accountability for what they hold, right? So the thing, also the other thing with the Genius Act is there's no interest or yield for holders. So like holders meaning you and I. We can't earn yield on the stable coins once the Genius Act is fully in effect, right? So they can't pay you interest on holding the stable coin. It's purely for payment, not as a savings or investment product, right? So in short,
Digital X, didn't they? Isn't that why Coinbase actually said that they didn't want to in the bill? They didn't. Wait, what just recently happened? They wanted to earn yield for holding stable coins. No,
issuers can earn yield, but customers like you and I cannot. So that's what the Genius Act is about. So
you're saying who can? Can anybody?
Retail investors and all of us as customers, we can't. Issuer can earn yield, treasury yield from holding or issuing the stable coins. Yes.
Oh, wow. Okay. So is that why Coinbase, Brian Armstrong voted off they had a recent vote on that, right?
Well, Brian Armstrong, Coinbase, it has not applied for a bank charter. They're not a bank, so they're an exchange. There's a lot of these other companies like Ripple that have applied for their bank charter license. So it benefits the bank chartered companies better than the exchanges, right? So that's what I see. I mean, it's a cat and mouse game right now. They're just trying to leverage each other's talking points.
Yeah.
So I believe eventually everything's going to get worked out, and everything should be fine. But it's a political game that they're playing by both sides. That's what I see.
So in the Genius Act, the bill, that the reason why they voted on it, I believe it was last Thursday, and or did they extend it? They delayed it because everybody wasn't on the same page.
The Genius Act was passed 3-4 months ago. This is the market structure bill, which also named as the Clarity Act. Yeah.
My bad. Okay. Yeah. I got mixed up there. All right.
So in short, the Genius Act forces companies to act like super conservative money managers. So their treasure. I want to ask you a question. How does this translate into crypto digital assets? What coins or which protocol should I or you invest into? These are questions we all should ask ourselves. Which coins do you guys hold? Why are you holding them? And what is your strategy for short-term and long-term?
Yeah, these are questions that we should be asking what we talk about here on the Crypto Flywheel, right?
Yeah. Exactly. Hopefully, our listeners are able to understand the importance of this new asset class and how you're able to benefit from it. So do you have any other?
Well, yes, I do. I wanted to add, look, when we talk about, we did a full 8-part series. I know that Digital X, you're going to go into it a little bit more, but what we talk about, the ISO 222, when we talk about that ecosystem is the messaging system that goes the standardization for the new financial asset class. right? When they're ushering this in, when we talk about this stuff, we're talking about being essentially your own bank, how to position yourself, which assets you're going to hold, and then as they come online and evolve, be able to earn yield for holding it. So you don't have to really sell any of your holdings. You're going to effectively lend out. We talked about it in previous episodes about the IULs, current IULs, and how you can lend out borrow off your own IUL cash value. Similarly, we can do that here now with holding stablecoins and some of these assets that we have that facilitate these blockchains that are facilitating this ecosystem. So in subsequent episodes, as this space is evolving, we're going to be talking about how to take advantage and position ourselves. And for our listeners, that's how we're going to add value to you. So keep tuning in and asking questions and engaging with us.
Well, I wanted to go over what you guys are holding. I can tell you from what I am, my belief in these assets, I only invest into assets that I 100% have faith in. So even if the prices go down, I'm not worried because I know what I'm holding, and no one can convince me otherwise that I've made a bad investment. So some of the projects that like ProfessorX and I have, we spoke about the ISO 222 coins and tokens, and we hold substantial amount of those. So my belief in XRP, QNT, it goes very deep. I think they're two assets that are going to do very well, hopefully in the near future. Once this shenanigans that's going on with the political landscape, gets wiped out, I'm sure we'll start seeing appreciation in our assets that we've invested into. There's Algo is another one, HBAR, XDC, even ADA, IOTA. These are all solid projects that have some sort of fundamentals behind it. Yeah, XLM. Oh, I forgot about XLM. XLM is very good project as well. And they're doing a lot of peer-to-peer, and it's just basically for the retail sector, right?
Yeah. So also Digital X, I wanted to just say, look, what's happening right now, today's the last day of the Davos meetings, right? So I'm sure it's probably wrapping up, being that they're in Europe right now. So it's 7 hours, 6 hours ahead, whatever it is, right? So it's probably wrapped up. But that's all. What's happening out there is really a smokescreen. I keep referring to that. They're talking about all these things that are AI and geopolitical narratives, and all of this smoke. President Trump's talking about certain things as it relates to geopolitical narratives, right? But ultimately, what they really happening is these things are being ushered in. The new financial system is being ushered in while mainstream is covering political narratives.
Yeah, I'm actually glad you brought up AI, and they have different agendas, right? So you having said that, I wanted to talk about something along that line. Professor X is right. They have a different agenda. The agendas that they have, they won't let us know, but their plans are in place. But so this is just my opinion. I could be totally wrong. It could be a conspiracy theory. It's all about technocracy. I'm sure some of our listeners may know what technocracy means. For those that don't, let me describe it for you a little bit. So technocracy refers to a system of governance where decisions are made by technical experts such as scientists and engineers rather than politicians or elected officials. So this is what Elon Musk, Peter Thiel, and other PayPal mafia investors want. Don't be fooled by their talking points. They're very deceptive in how they move. So their agenda focused on reorganizing society and economy based on scientific principles to achieve efficiency, abundance, and sustainability, arguing that traditional capitalism and politics were inefficient and wasteful. Where have you heard that? Elon Musk talks freely of that. He said, you're going to be getting free money, right? More money than you can imagine, right? This is a core part of the original Technocracy's agenda. It was indeed to replace a traditional monetary or price system with an energy-based accounting system. So this involved using energy certificates or energy credits as a form of distribution rather than money. So we have blockchain, we have AI, right? So everything's going to be transitioned into that aspect in the new monetary system. So do you really have to make payments in dollars or stablecoins? No, they have a longer plan in mind, right? This idea was rooted in an energy theory of value where production and consumption of goods and services would be measured and allocated based on the amount of energy required to produce them, rather than market prices, profit, or scarcity driven by supply and demand. So this is how it works. So total available energy would be surveyed and quantified for a given region. And then this energy budget, what they call it, would be divided equally among adult citizens who would receive non-transferable energy credit periodically. So you can't transfer this. It's not like you can say, hey, I'm going to give my son like that $100,000, for him doing whatever for his purchases or whatever, right? But you can't transfer these energy credits. This is how they get you. So then citizens would use these credits to purchase goods and services with price set according to energy cost of production, transportation, and distribution. So what ends up happening if you don't use it? The credits would expire at the end of the period to prevent hoarding and encourage circulation. So this is what I see transpiring in the future. I don't think it's going to happen anytime soon, but that's their agenda. I don't know if it will happen or if it won't happen, but this is just the theory that I have, so don't just take it for what it is.
Well, I agree with you 100%, Digital X, with regards to what you were talking about in terms of technocracy. And from a crypto flywheel perspective, what we wanted you to understand is something called on-demand liquidity and what the digital ledger technology represents. It replaces the trust in institutions with trust in a verifiable system, which is essentially what transparency, security, scalability, we've talked about it before, right? So these things are what's going to provide open access to the new financial system for investors and people, just regular people like you and I, right? So we are going to be able to take advantage. If you know how to do so, you will be able to take advantage of yields and that are not your typical banking type yields where you deposit into a bank account and get 0.001%, right? So that's nothing. That's not anything to write home about. So all the stuff that's happening within this space, like tokenization, there's a network effect that replaces that central control. So now we're talking about real democratization of our monetary system, right? Yeah, that's what the technocracy or democratized technocracy means.
Yes. So you want to add anything else?
Actually, I want to just say one last thing, and then we can wrap it up if you don't have anything further. So, for the crypto flywheel, the true crypto flywheel message is, in today's evolving financial or new asset class, we have access. The true crypto flywheel is rules, access, participation, scale, trust, adoption, and reinforcement. All of these things are what's going to eventually enable us to take advantage of this financial system and what banks typically or investors or large institutions take advantage of. So these are things that are going to be easily accessible for us with the new open digital ledger technology and on-demand liquidity. So that's all. That's what I have to say. So in future episodes, we're going to be tracking this and how to position as we are positioning ourselves, Digital X and I. When we position ourselves, we're going to talk about it and say, hey, this is what we're doing to receive yield. You know, we're getting X number of percentage monthly because we're providing or lending our assets. So we'll talk about that as the days and months go by.
Great point. Hey, I just wanted to add one more thing. I seem to have forgotten it, but I think it's important. Gold broke $5,000 per ounce, and silver has broken $103 per ounce. That's on the COMEX. So that's the paper prices, but the actual prices are actually even more than that. But that's I thought that was pretty big today.
No, that's very important. Yeah, we should. I'm glad you brought that up because that's very important and quite telling about what's happening. While Davos is happening out there, they're really not talking about all of this stuff. You know, make no mistake, for our listeners, United States is not behind in reserves as the narrative tells us, right? We hold our reserves in Fort Knox, and we can't really tell. They don't really disclose exactly how much is in the Fort Knox, right? So we're not somebody to what they're saying is that we don't have enough or gold or silver.
Professor, I thought you had the keys to Fort Knox.
I do. In my mind, in my dreams. Yeah. But yeah, so, I mean, great point, though. Good thing you know that was a big deal. You know, it's unprecedented. Well, it made history.
That just shows you trust in the dollar there is no trust in the dollar no more. You know, everyone's moving it to gold and silver.
But, Digital X. I have to also say this. President Trump, he provided us with some assurances when we elected him in for this past term, right? This past election. Yes, he did quite a few things. I mean, I'm still giving him the option. The benefit of any doubts that I've had in the first year. So I think that he's bringing back everything to the United States. After Davos, I really think that, it may have gone astray a little bit, off track a little bit, but I think that there might be still some confidence left in him that he's going to bring back and grow the American economy a little better. The telling sign will be Digital X, I think, on what the crypto or the digital asset space and all the legislation that's going to be passed that's promoting it. So that's what I have trust in, is that as long as the crypto and digital asset space is going to evolve legislation-wise, I think that we're going to be fine. Our economy, the dollar value is going to still maintain. They're going to, because of this system, we're going to be able to eliminate some of that $38 trillion debt that we have. So that's there.
You have more trust than I do. Me personally, I have no trust in either party. It's basically a uniparty. They're going to move on which lobbyist pays them the most money. That's where laws and rules are written and brought up. But I'm wrong. But that's what I see, and it's just an opinion. I'm not taking any sides on any party.
Yeah, absolutely. So I mean, Digital X, do you have anything further to add? If not, I think we've gone significantly over our typical time.
Yeah, go ahead and flywheel out of here, Professor.
Well, again, to our listeners, I always say comment in our section, any comments that you have in our, and we'll answer it there or in subsequent episodes. So with that, the Crypto Flywheel is signing off. Thank you.
Thank you.